morning. You're watching The Market right here on 89 with me, Ashok, Nikunj Dalmia in the studios. A long weekend and we're back with some gains actually. Coming in for the GIFT Nifty was holding up about 35 odd points this morning. In fact, we're starting off pretty much at the fag end now and of the year. Who would have thought? We're almost stepping into December.
Long weekend for us, long holiday for us.
Yeah, but how time flies, right? And it's been an interesting month gone by and week.
See, the week gone by in a sense just re-established the obvious, which is that global cues are settled, geopolitical concerns are behind us.
But record highs for the broader markets. I mean, I know we've been moving in that trajectory for the past many weeks, but...
Yeah, so more of the obvious got endorsed, which is that,
right.
you know, the outperforming trend this year has been, if you go down the ladder, the outperformance has been the highest. So I guess that trend in a sense has only extended itself. If you look at Nifty, frankly, based on last week's price action, whether Wednesday or Thursday or Friday, it was evident that Nifty in a sense once again became directionless. Over the weekend, you know, everybody got WhatsApp talking about what happened to the IPO market. So if you really look at the mood point in the market, well, the mood point this week would be centered around the IPO listing. The mood point this week really would be, will Nifty after 2-3 days of trendless move, will it really get ready for a last hurrah or a bout of short covering before the year unwinds? And then somewhere markets would also be focusing on the real impact of geopolitical concerns as to how that in a sense, will it reignite flows? Because geopolitical concerns are getting settled. Crude is now definitely below $80 and the dollar index is at a multi-month low. So all these combination of factors now, will this really in a sense kickstart momentum or kickstart that last hurrah which we've been talking about for large cap stocks?
Yeah. Having said that, you know, while we're stepping into the fag end of the year, pretty much, there are a lot of key important things to track as well. Of course, we'll have the November series expiry. There'll be tons of D Street listings too, and then the state election outcome as well. Besides, of course, you know, monitorables like dollar and Brent.
Yeah, so, you know, Aisha, I think this week everybody would be directly or indirectly, they'll start talking about the outcome of state elections because while we've learned from the cricket match that semi-final is no benchmark of what happens in final.
Damn,
so, yeah.
We're meeting the first time after the World Cup.
Yeah.
Oh my God. Yeah. But anyway.
But yeah, so this in a sense is the semi-final. Anything can happen. So markets know that you should not assume that what comes out in terms of state elections, that is going to be the final verdict. But in terms of a market moot point, well, the moot point really could be there. So if Nifty, if the outcome of the state election is something which markets like, then are we in for a bout of short covering and are we in for a 200 to a 300 point move on the Nifty, and will Nifty go closer to 320,000 because of the outcome of state election? That very well may be the case. If markets don't like the outcome of state election, then Nifty again automatically will slip back to the lower end of the range. So purely from a market standpoint, it's going to be a 300-400 Nifty swing event, but it's coming at a time when technically Nifty is getting ready for a next breakout, and could this really be the trigger point? So a lot of market mind space would be occupied. A lot of narrative next couple of days would be centered around, okay, what will come in these 4 state elections. But purely from a market standpoint, apart from the Nifty, you know, pattern which I prescribed, I think this will come and go.
Yeah, a lot of primary market action as well. There's the likely debut of Tata Technologies, Flair Writing, Federal Bank Financials. There's IREDA as well, which is going to be listing on December 4th. So, yeah, big ones actually.
Yeah, this is the big one. I mean, Tata Tech or IREDA, they are going to be the listings of the year. I mean, especially Tata, you know, Tata Tech. You pretty much know that this is not going to be a small pop-up. It's going to be a bumper listing. And after that bumper listing, I definitely feel that the trajectory for Tata Tech, both in the near term and in the short term, I think is trended higher, largely because of A, it's from the Tata stable. B, it's a niche technology company. C, technology stocks in a sense, if they have a bent of design and engineering, I think they've done rather well for themselves. IREDA again, very niche, very specific. There is a buzz that, you know, they could get Navratna status. If that changes, then what happens to them in terms of the future trajectory? I think that really would be exciting one. Gandhinagar Oil, and flare writing. Those are small ones. They are not going to really.
Stellar subscription for like a flare, for instance, is what.
See, Avan, you should not read too much into subscription numbers now. Why? Because these days the gap between by the time you hit market and list, I think is less than 3 days.
Yeah.
B, there is there used to be a time when the subscription number were a benchmark of what the market underlying interest and participation was, because that time the cycle was a 3 to 4 week cycle.
Right.
Now it's a 3-day cycle. So I will not read too much into the subscription numbers.
Yeah.
I don't think this is an indication that, okay, markets are looking hot, and this is not an indication that, if subscription numbers are strong, that the stocks will do, bad or poorly. So yeah, this whole action in the primary market will keep us glued to our screen, especially, for IREDA and for Tata Tech. I think everybody would like to know that where the real price discovery would happen. Could they go the DMart way, which is that after a strong listing, they continue to go higher? Could they go the Hunasa way, which is that the listing did not give them a good response, but post numbers, they just hit out of the park?
And then employees are booking losses.
Actually,
they're
she's
selling
denied
the
it.
ESOPs.
She's denied it somewhere.
She's denied it, yeah, but...
Let's see. I mean, we'll try and get something from the management. But I guess as if you ask me, Hunasa as a stock, I was surprised. I was surprised with what happened to the stock post numbers.
Yeah.
Well, the number trajectory is fine and everything is looking up, but that kind of a jumbo monster rally post the numbers, I didn't see that coming, to be very honest.
Yes, indeed, and that is the last week action for Honasa just in the last 7 days. But that aside, let's also track what's going on across the globe, and safe to say that it's been choppy to say the least. You had the US markets, which wrapped up and lost really ground on Monday's trading session. It was a 4-week winning streak that we have seen for the US market. So starting off this week, at least, on a pretty tempered note. The volatility index has bounced back, and this morning, Asian markets, they have largely rebounded, but you've also got crude oil prices that are in the spotlight, hovering around $80 per barrel. You've got the OPEC plus meat that will be closely watched out for. Gold near 6-month highs, and the dollar index, by the way, is headed for the worst month on a year-to-date basis. Monitoring well what's happening with the state of the economy with respect to cooling interest rates. All of that as well has kept treasury yields slipping this week. So when we're looking at the overall global setup, 4 straight weeks, Nikunj, that we've seen pretty stellar gains across Wall Street, kicking off this week on a little bit of a tempered note, but doesn't really spell what's lying ahead.
See, from an India standpoint, there are 2 or 3 things which matter. First, the general setup. The general setup, I think, is more bullish than bearish. Geopolitical concerns, the movement in bond yield, that all is settled now. B, let's look at the importance of dollar index. Now, historically, the weakness in dollar index has always transpired into flows back into India. So if you're a foreign investor, and frankly, if you have to take a view on India, I think this would be the conundrum. Do you come now or do you come after election? If you come now, well, you are getting large cap stocks at reasonable valuations. If you come when there is going to be clarity in terms of the election verdict, then you will not get the Nifty at 19,800. Then you will get Nifty at 22,000. So I think that's a conundrum right now. Large cap stocks, I think, are reaching that point at which they could be called as value stocks. Starting from what Reliance has done in last 3 years versus what Bajaj Finance has done, the kind of returns what you've got from a Biocon, or the fact that a stock like ITC has given no returns from last 6 months. So I think we are reaching that stage where some would argue and say that given that now global markets are stable, the yield is looking settled, things for the large cap stocks may just start looking bright. It may happen sooner than later, it may happen this year, it may happen early next year, it may happen after election, I don't know. But all I'm saying is that for large cap stocks now, the risk reward ratio is quite decent.
Yeah. Okay, on that note, let's also find out what the global commentary overnight has been. While yesterday we were on a trading holiday, most of the world was trading, and the implied open for the Nifty is now inching closer to that 19,900 print. Vinny is here with all the global commentary. Vinny?
Good morning, and let's start the first commentary that is actually coming in from Peter Schiff, and this one is on gold as well as Bitcoin. Now, what he's highlighting is that the breakout in gold may actually coincide with the breakdown in Bitcoin, because this is making sense, because in the past when we have seen, and what worked out is when the gold was falling, we've seen the Bitcoin actually see a rally, and all those pumpers of Bitcoin had used gold failure actually to use it and increase the prices and move Bitcoin towards the higher side as well. Now, obviously, what they're highlighting is that Bitcoin has, supposed the digital alternative as well. But once the real thing actually starts working out and starts performing, there's no need for a cheap imitation, is what he's highlighting in terms of a gold and a Bitcoin. Let's move on to the commentary that is coming in from ECB's Lagarde, who's highlighting that they're seeing signs of softening in terms of the euro area labor market. Furthermore, she's highlighting that they're determined to ensure that the timely return of inflation actually comes back to the 2% mark. Likely, they believe that the economy is likely to remain weak for the rest of the year as well. So yes, keep an eye out on those factors there. But labor market is something that has remained resilient, and they want to bring back that inflation to that 2% mark as well. They will be consistent on that. Moving on, we have commentary that has come in from Andrew Bailey as well of BOE, who suggested that interest rate cuts are unlikely for the foreseeable future. And obviously, the recent inflation figures are something that is a very good news that has come in there. And obviously, he's warned that the second half of the inflation battle is actually more about the hard work. As of now, the policy is operating in a restrictive way. So keeping an eye out on all these commentaries this morning.
Oh, yes, indeed, we are. Thanks very much, Vinny, for that roundup. Let's connect with our charters then to find out the road ahead for the equity markets. Naresh Mirani joining in, and we've also got Kunal Bothra right here with us in our studios. Morning, gentlemen. And let's talk about the index, longest winning streak in the last 4 months, but more importantly, the broader markets at record highs. Kunal, what is this indicative of?
Yeah, good morning, Avan. So the broader markets have been doing pretty well for us. I think the small caps and mid caps have made a very good comeback from their October mid lows. I think October 20 lows for themselves. More importantly, I think what we are trying to look out for is comeback of large cap names. I think that could be a decisive factor for the indices to not just gain further momentum from current levels, but surpass the psychological levels of 20,000 and then the previous highs of 20,200 on the Nifty. What we saw last week, and especially in the last couple of days of the previous week, was the slight comeback in the bank Nifty, and particularly the likes of HDFC Bank, etc., Axis Bank making a decent comeback. So I think if you manage to see maybe a few more legs on the upside for these large cap private sector banking names, we could be expecting a second round of strong momentum for the indices.
Okay, Naresh, hi, morning. What do you think is the trend that's going to dominate this week?
So overall, looking at large caps to make some bit of a bounce back, we've started seeing at least Reliance Industries make a comeback. Now we are seeing some bit of a uptick in, say, HDFC Bank. Now we need to see whether we can follow it up across the board. So overall, the focus is to look at large caps, whether we can start seeing a trend in a lot of these names. We've done well on the overall. If we look at the large caps, we've been doing fine for the whole name. So if you look at Nifty 50 equal weight, that tells you we are at a percentage or 2% above the previous all-time highs. So it's very clear the heavyweights have been sulking, and we are seeing the first signs of heavyweights taking some leadership. So expecting some bit of a bounce back in the heavyweight names like Reliance and HDFC Bank.
Right, let's find out the individual stock recommendations then that our chartists are betting on. And Kunal, what's looking good this Tuesday morning?
So yeah, I think in terms of individual stocks, there are two themes or two stocks which have managed to stood out. HAL, Hindustan Aeronautics, is the first stock which I would suggest as a buy. Attractive as a short-term setup. The stock has done reasonably well, and I think more importantly on the daily charts, the stock is forming a V-shaped recovery in terms of the previous lows. So that's a buy. Targets of 2280, stop loss at 2212. And the second is about Hindustan Copper. This could be a strong breakout candidate. The stock is forming a bullish flag formation on the daily charts. Is trading above the 50-day moving average. So would suggest a buy in the anticipation of a breakout. Targets of 172, stop loss 163.
Okay, and Naresh, what's your stock specific list looking like?
So first is the buy on Bharat Forge. The stock earlier gave a big breakout above the 900 mark, which was a resistance for 2023. After making that move towards 1130 to 1145, consolidated for the last few months, made a test of 1020 levels, and now is making a comeback. The previous two highs are around 1128 to 1145. The stock has come closer to 1120 mark. So looks like a fresh breakout and a fresh trend in the making. So expecting a follow-up move towards 1200, stop loss at 1018. Second is a buy on GMR Infra, which has seen a good move on Friday in terms of price and volume action, the highest volume in the last 3 months. So looks like a price volume breakout. And on the longer term basis, the stock gave a multi-month breakout back at 45. And also, if we look at the stock prices, the stock is at a 10-year high. So looks like setting up for a move towards 65, 66 levels in the short term, stop loss at 59.
Thanks for running us through all of your top technical ideas. Let's get a move on. Stocks to watch, strategies as well to track. And Anisha is here to talk us through just that. And Anisha, let's begin then with Jefferies with a very positive note on BSE, talking about how the company is riding high on digitization and they'll double earnings over FY24 to 26.
Yeah, and that's quite impressive given the fact that stock has already moved from 500 rupees level that we saw at the start of the year all the way to 2000 plus. So it's already seen a 4x jump. But Jefferies believes that there is 24% more upside from the current levels, and that's why they've initiated coverage with a buy with a target price of almost 2700 rupees. Well, yes, financialization of Indian savings is something that is definitely working out. That's quite visible in the number of demat accounts and the kind of IPO participation that we have seen. And BSE could be one of the key beneficiaries of that entire wave as well. They are saying that BSE can leverage the macro tailwinds along with the headway into derivatives that could deliver 150% earnings jump in FY24 and double it over FY24 to 26. As far as derivatives is concerned, they call it the ramp up of derivatives as a key driver for recent earnings upgrade and stock performance. However, the key risk as per them is the competitive intensity from NSE, because you remember for derivatives, in a matter of 6 to 7 months, their market share has actually gone up to 14% versus around 1% that we had seen earlier. Even in terms of valuations, they're calling it quite reasonable. It trades at 31 times forward earnings, and that compares with the average of almost 48x that I've seen for depositories, over 30 times for RTAs as well. So overall valuation is comfortable still despite the 3x, 4x jump. But Nikunj, would you concur with this view? I mean, the stock has run up quite massively, and then there is that entire play of NSE as well that even I think you were discussing with Manish Chokhani as well as to how Street is looking at that also positively and how that could drive the overall sector.
So BSE's market share has gone up in the derivative market from 1% to 14%, right? But 85% is still NSE. And, we've always seen that winner takes it all. I mean, 85% market share for NSE in the derivative market, and given that NSE in a sense is now going global, they will have a huge advantage of what's happening in the GIFT city. And if NSE valuations in the non-listed market, which is very liquid actually, if you look at NSE, very liquid, are actually lower than BSE. So if BSE was at 500, it was an attractive buy. But BSE at 2100, I guess it is now factoring in the turnaround which nobody anticipated. I guess the magic for BSE has happened is because of the change of guard and the fact that they've come back and they've really regained their mojo, at least in the derivative market, which nobody expected them to do. Now for them to gain incremental market share at that space, it's not going to be easy. So our markets factoring in what the turn at BSE has been, while at 2100 some would argue and say yes. Then you compare NSE and BSE. Of course, NSE has a much larger market share, and if NSE valuations in the unlisted market are lower than that of BSE, yes, an underlying risk is of valuations of listing, but then should BSE command that kind of a substantial premium? So in my book now, I think BSE is fairly valued. It's not expensive, but it is not very cheap, and the turn which in a sense really stumped everybody in terms of market share gain and profitability jump, I think is something which is yesterday's trend, not tomorrow's story.
Okay, that's the take coming in on BSE. But besides that, quite an interesting note from CLSA saying that small and mid caps are now looking overextended.
Yeah, ahead of their conference, they have come out with quite a few notes, and small and mid cap is something that they're calling overextended, but banking is one space they're very positive on. In fact, they're saying as far as small and mid cap is concerned, the further outperformance is going to be quite limited. It's not going to be easy, but banks are the most attractive sector within Nifty, and that's why it's the biggest overweight right now. Banks, for them, on a whole, are trading below the long-term average valuations as well. And if you look at the divergent moves within banking space itself, it's the big banks that are undervalued and over-owned, while if you look at the broader banks, they have managed to run up quite a bit. In fact, valuation premium of the small and mid-cap banking names to big banks is at 8 to 10-year high. So the small and mid-cap banks are trading at a very high valuation premium. The FII and the domestic mutual fund overweight on banks are near the record low. So while we do talk about over ownership in the sector, Nikunj, it seems like it's not the case for the big banking names, and there is a bit of under ownership, at least in the domestic MF world.
So Nisha, the story is very simple. The large cap banks are now becoming cheap, and they have now gone through a phase of brutal time-wise correction, even though earnings are not that bad. The reason why mid and small cap stocks are looking extended is only because of liquidity, and performance will always chase performance, and since they are outperforming the flow of money, whether it's the mutual fund industry or the DII or the PMS, it's really tilted towards small cap stocks and mid cap stocks. And I think rarely it happens that with the exception of let's say one or two sectors where small cap stocks are trading at a discount to large cap stocks. I don't think there is any sector where where small cap stocks are trading at a premium to large cap stocks. It should always be the other way around. And one point I think we've been talking about is that why banks are underperforming. I guess the real fundamental factor is that NIMs are peaking out, and the technical factor is flows and over ownership. So what CLSA is saying, I think it's obvious. I mean, nothing new. But I don't know how long will this kind of an underperformance in bank will continue, because for banks to genuinely come back, flows have to come back. And it's a judgment call whether flows will come back before election or after election. Whether flows will come back, after 2023 in the first month of 2024, or they will come once global investors get a complete clarity on where the political landscape would move. That's anyone's call.
Okay. Anisha, thanks for flagging off for both those interesting takes. One, of course, on BSE and one, the India strategy by CLSA. But Paytm also could be the other stock to watch out for today after the exchange filings reveal that Berkshire Hathaway has exited the company in a block deal offloading a 2.5% stake. The buyers in the transaction include Copthal, Gisalo Master Fund, which picked 1.19% and about 0.6% stake respectively in this one. And I think they also exited at a bit of a loss, right?
Paytm never enjoyed this Berkshire premium. It was never a Berkshire company.
Yeah.
There are companies that Berkshire Hathaway is invested in. It always used to command that, okay, this is a stock or a company which is endorsed by Berkshire Hathaway, and that in a sense is going to be the next wealth creator. With Paytm, even though Berkshire Hathaway invested in them when they were, I think, not listed. Yeah, they were not listed for sure. I think 2018 they invested in it. It never really enjoyed that premium. It went public. Okay, Berkshire Hathaway was an investor in it. The stock had a very poor listing debut, and then it came down almost to 500 rupees, despite the fact that Berkshire Hathaway remained invested in it. Now this is not an investment, or this was not an investment by Buffett himself. It was by his team. So you got to take that with a pinch of salt. I think this, in a sense, could be one of those factors where Berkshire Hathaway have said that, okay, our template why we invested into Paytm has not translated into reality. So it's a pure investment decision. Since the stock never enjoyed the premium because of Berkshire Hathaway, so even if Berkshire Hathaway is exited, I don't think there would be any impact per se. For example, if there is a company where the great Rakesh Junwal had invested or Radhakishan Damani had invested, it always starts enjoying that premium. And when they exit, market would say, okay, the pipe piper is out, what happens? So Berkshire Hathaway was never the pipe piper. Yeah. So it's going to be just 2% investor which sold in a block deal, nothing more, nothing less.
Okay, but the stock is certainly going to be tracked on the back of this news. Let's slip into a quick break, and as we do that, here are the Finance Minister Nirmala Sitharaman speaking at the India Global Forum, where she shared how global investors need not be jittery ahead of the general elections in the country. She also emphasized how PM Modi is set to come back into power. Listen in.
I would think they need not be jittery at all. To be unclear, to be keeping their fingers crossed and so on is normal, and I can understand that. But here am I, and also there are several people who are observing the Indian economy, observing the political environment, observing the ground level realities, and the situation as it prevails today is Prime Minister Modi is coming back, and coming back with good majority. Consumption is falling in many Western economies. Why should that affect me? It should affect me because our exports are so much dependent on the European market or the advanced economies markets, where if the demand is falling, our exports are going to be adversely affected. So that is one of the indicators that the challenge is are posing downside risks. Similarly, the US Fed's interest rate policy and also the inflation situation in all over the Western economies. Interest rate being high for long is also having a bearing on how investments are going to flow into India. And the exchange rate, particularly for the Indian rupee versus the US dollar, is another factor on which I would think we have to keep a continuous watch.
Back with the market right here in 80 now, and capital market regulator SEBI over the weekend has decided not to go ahead with the proposed new delisting norms. In her address to the press, SEBI's board meeting a while back, the chairperson Madhavi Puri Butt said that the regulator would examine more data to consider the delisting norms. SEBI has also approved, remember, amendments for investor protection in AIFs, that's alternate investment funds, and facilitation of small and medium REITs.
Very happy to report that the commitment to using data for policy making is now, there's such a strong commitment that the board guided us that since the number of delisting applications, even over taking a long period of 5 years, has been pretty small, and therefore the data set is pretty limited. To draw very significant conclusions from that may be difficult, and therefore the board has guided us to go back and do certain further examination of certain data and do certain further consultation with certain stakeholders so that we have a better sense of this, since the data set was actually extremely limited. That is the reason that it was not done this time.
Let's welcome on board then Sanjiv Bhasin as well, who joins in on the show to track individual stocks. And Sanjiv, good to have you on board. Let's begin by getting in your take as to what you make of the Berkshire Hathaway exit for Paytm. Is it going to materially impact the stock according to you?
Yeah, good morning. So, Awan, it's a buying opportunity. I mean, Berkshire has not exited because he's in a profit. It's because of the mistiming of the event before the, pre-IPO placement and so on. We think Paytm is a unique case of the fintech and the digital app going extremely positive. Positive news on their NBFC front is also where they are doing Kirana lending. I think this is a must-have in a portfolio, and use this large exit to be a buying opportunity. Now the original owners are the promoters are the maximum holders, with even and shareholding now coming to almost below 10%. So there are no very big shareholders. And I think this is only a matter of opportunity to buy this stock, because I think fintechs, particularly PB Fintech, Paytm, Zomato, are headed much, much higher over a period of time.
Sanjiv, hi, morning. Wanted to understand what is it that you're making of platforms like BSE. There's an interesting Jefferies note where they believe that from the current market price, there could be a 24% upside as more participation and digitization only increase further penetration. They're expecting an earnings jump of almost 150% in FY24.
Yeah, good morning, Aisha. Actually, the recent events, I've been part of two of the what we call presentations which BSE did in smaller cities, where they were advocating a large amount of their derivative market and the products which they had, which seem to be at a much bigger discount on a transaction basis to the NSE. And that has picked up, very, very actively. I think as an exchange, there are 4 conduits as intermediaries: exchanges, AMC, brokerages, and insurance. These are headed higher over a period of time, irrespective of markets, up and down. The sheer weight of financialization of saving means these are the best conduits which are going to make transaction-based money. So we are very, very bullish on the entire exchange space. Hence, MCX is something which is in our portfolio. We have advocated IEX at lower levels, but BSE has been a star. It's up, I think, it's almost tripled in the last 2 years, and I still think there is room on the upside. As a disclosure, we are one of the brokers there, so we have a vested interest that exchanges do well, and in turn the brokers.
Exchanges like MCX, BSE on the charts, given the mammoth move that we've seen in them?
So again, I think they look very attractive even at current levels. For example, MCX particularly, the stock has just recently managed to break out just about, I think, the last one and a half odd month back. That's where the move started off for MCX. I think 1900 approximately was the resistance band for MCX, and from there on we've seen this, and that was a multi-year resistance for the stock, and from there we've seen the stock moving up hard to 2700 800 plus mark for itself. Now it's on the verge of breaking past about the 3000 levels, which could be again a good psychological break for MCX. And in that time span, BSE has done exceptionally well. I think the stock has moved from 600 650 odd levels 6-8 months back towards now 2000 2500 plus mark where the stock has been trading. So exceptional move for BSE as well. The stock has gone through a mild correction. I think a 3-day or 4-day correction has already happened for BSE from the previous highs. And I think that could probably make the opportunity a bit more better at current levels. But I think both the stocks are looking attractive.
All right, speaking of stocks looking attractive, a bumper few weeks for IREDA after the stellar response to the IPO. It was oversubscribed 40 times. Sources say that the company could soon get the Navratna status. Let's get in Prakash Priyadarshi, who joins in with those details. Prakash?
Yes, we are learning from our sources that the proposal to upgrade IREDA as a Navratna company will be accepted soon. In fact, we are given to understand that it's under active discussion of the Ministry of Finance and Department of Public Enterprises, which comes under Ministry of Finance, is likely to meet all stakeholders this week. This meeting is preferably going to happen on November 29 or 30, which is an important development coming in as far as IREDA is concerned. As you are aware, at present IREDA holds mini Ratna status, and granting Navratna status means that the company will have more financial freedom in order to take capital expenditure decisions. So that's a very important decision. And also, once there is a consensus between the stakeholders, Department of Public Enterprises will issue circular. So we are given to understand from our sources that the Ministry of Finance is actively considering this proposal, and a final decision will be taken very soon.
Listing tomorrow. Ahead of that, it gets into Navratna. Well, very simple. If you get into Navratna, or if government gives you a Navratna status, what changes? Your ability to raise capital at a much lower cost rate increases. If your ability to raise capital at a much lower cost increases, then your spreads either will increase or your profits either will increase. And it really could be both. I mean, they both are intertwined actually. They have to increase simultaneously. So, in terms of IREDA, could it be a case that a bit of a government push in terms of policy change, could that really change dynamism for the entire sector per se and for the company per se? It's a business which is likely to grow. It's a space where excitement is high, and it's a opportunity where if they are really doing the right amount of lending in the entire green space or the renewable space, then the growth I think is going to be very high. So Sanjiv, I've said all the good things about IREDA, but the concern here is that ultimately it's a cyclical business. It's a business where 3 years you will say looking great, but post 3 years you don't know what will happen to energy prices. You don't know what will happen to the cyclicality. You don't know what will happen to the government policy.
Yeah, good morning. Nikunj, you're right. You can weigh the pros and cons, but the opportunity, the sheer weight that Tata's and Government of India have left something on the table for the retail investor, and, very, very pedigree names. So that is what, you are aware, REC, PFC have been in the best space in the last 2 years than in the last 10. Now, they are assessed to sovereign debt. They have a bond rating which is the highest ever, and return on capital because of transition of power surplus and receivables became extremely attractive. So 11% dividend yield is something which made them stand out. The same would be the case for IRDA, but like you have to weigh the negatives also, change in government policy, change in government stance. But I think it is universal that green energy, clean energy is something we are going to keep striving. By the way, ESG compliance stocks and funds have a huge inflow from Middle East and other places where there are benchmarked funds for such corporates and bonds and so on and so forth. And I think that is a very, very fast growing space which will always have an added advantage of lower yields and cost of money. So I would definitely give it a very, very thumbs up on this Navratna status. You will get a very sharp bounce on opening, and I think it is an accumulate for a slightly longer period in your portfolio.
Okay, meantime, interesting reports coming out, and Jefferies has come out with their latest note on the property sector, talking about how it's seasonally off to a great start, and the key beneficiaries of the affordable scheme will be the likes of Suntech, Lodha, and that valuations look attractive for a Godrej Properties and Suntech, and they're among the top recommendations. What's your outlook then, Sanjiv, given the kind of traction we've seen within the entire property space?
So Avan, DLF and Godrej have been two of our portfolio picks, almost half the levels where they are now. And we were also very, very bullish on property, given that asset monetization or asset creation of wealth, because of the twin rally in gold and stocks, will see hard assets do well. DLF has reduced its debt substantially over the last 2 years. Return on equities improved. Like I told you, I stay very close to Camellia, Magnolia, which are selling at a very, very biggest premium ever. Godrej has taken the bull by the horns and expanded all its network, whether it's Pan India or Vikhroli or you name the place. Then now what the space people are specifying is the brand which has, Lodha is specific to Bombay. Same is the case with Oberoi. They are specific to the area, so they have more expertise over there of how to deliver. And I think that is what is sending these developers or stocks which are being recommended. We still wait and overweight on DLF and Godrej, and we want to stay with the winners.
Okay, those are some of the stocks to look out for. Let's, since we're on the subject of some of these PSUs in light of IREDA, as our sources are indicating, could be getting a mini Navratna status. Look at the move that you had on a BHEL, for instance, on Friday. Kunal already flagged off HAL being one of his top picks today. But just wanted you to come in on some of these PSUs. What's looking interesting? One was just looking at the data and the kind of move that you've had in the last 2 years, for instance. I mean, everything from a Mazgaon dock to an RVNL, Ircon, Garden Reach, Hindustan Aeronautics, Cochin Shipyard. I can go on with the entire list. Coal India, BHEL. Phenomenal returns across the board.
So PSUs as a pack have done really well, and there has been a huge shift in terms of shareholding as well. So if you go back to HAL, there was a time where the IPO was oversubscribed by, fully subscribed only by insurance companies. At one point of time, LIC almost at 14-15% stake, which is now left to 3% or something. And we are seeing FII participation across the board. So you've seen that increase in all these names. So that's a big shift which has happened, which say 5-10 years back, we could only see OFS and stock prices falling. We are now in a different trend. We've seen one by one many stocks do well. At current levels, one name which has still relatively done nothing is Container Corporation, which has gone sideways for a long period of time. The stock used to be, say, 600 rupees in 2015 until 2018-19 was 600 rupees. We saw some bit of a breakout in 2021. It went up to 750, 800. And for the last 2 years, the stock has been stuck around 750, 800. So this is a stock which has a potential upside with lower risk. And the stock has done nothing compared to what has happened with the PSE basket as such. So out of all the names, majority are trending, but one name which is still pending to make a move is Container Corporation of India. That looks pretty promising at current levels.
Okay. By the way, whatever dipstick I've done over the weekend, it was a long weekend. A Delhi-Mumbai flight ticket at family traveling, 15,000 rupees.
And for hotels for Christmas and New Year's, you have to shell out $1 lakh if you are managing to get hotels in some hotels, at least the 5-star properties.
I never hunt for them, Avan, that's you. For me, bread and breakfast is fine. Got relatives who are everywhere, they're happy to oblige us. Yeah. Bread and breakfast works.
I hope your family agrees.
By the way, where are you going?
No, I'm here, Nikunj, don't worry. But yeah, prices are really going through the roof.
So, the reason I'm bringing this up is because, see what happened post pre-World Cup. Zomato and all the so-called food delivery stocks, they went through the roof, right? We all thought, okay, Indians will watch cricket and they will order more food, and that's what exactly happened. Now World Cup is over. So you may again start traveling and eating out food. So my limited point is that if one really looks at the next uptick in terms of where the mood point really is going to move, I guess the mood point this time around again could be back to travel and back to hospitality. I was reading a data on, I think Cheryl had forwarded that data, which is that you look at the sum total of Black Friday sales. And this time around, the Black Friday sales have not really been bumper in US. Why? Because the millennials now are not buying, are not buying things, but they are investing in experiences. So that's my limited point now, that focus on companies which are giving you experiences, whether it's travel, whether it's tourism. And also I was reading it somewhere that the US outbound tourism into India this year is expected to be 35 to 40% higher. Looking at the visa, what the US, US government has given to US citizens to travel to India. So I will not be surprised that what looks like a theory today actually may translate into reality, considering that this really could be the first big clean year for inbound tourism. So I will not be surprised that in the run up to, let's say, New Year's, hotel stocks could actually make a comeback. Some of the mid-tier hotels could actually start making a comeback. And there are a lot of hotel stocks which, frankly, if you think about it, they've not done exceptionally well. I mean, Indian Hotel down up 30%, Lemon Tree up 30%, EIH, the stock's done nothing. Chalet Hotel, okay, this is one is an outlier, I stand corrected, I didn't realize it. But look at EIH. I think Nuresh and we were discussing this year that this really could be the outlier now. Now that is this year's performance for you, but if you look at EIH for last 2 years, it's just been a puffy duffy stock. It has not done anything what Indian Hotel and other hotel stocks have done. 120 has become 230 for Indian hotels in about 2 years. That's EIH for you. An Indian Hotel has gone from 170 to about 430. So EIH technically has a lot of headroom left. Nuresh, EIH?
So, like the stock, if you look at it, we've seen slow and steady similar moves happen in, say, hotel names. So, if you look at a stock like Mahindra Holidays, that also continued to consolidate around that 300 mark, which was the 2017 highs, and then went up to 450. So, it was the second one which took a really long time. And now EIH is the next one, which has taken that long bit of consolidation around the 230 mark. The stock used to be 220, 230 back in 2007 and 2017. So the returns have been terrible over a very long period of time. And finally, it's a multi-year breakout. So technically, the situation is very similar to what Indian Hotels was at around 160 to 200 levels. So out here, the risk reward is still promising. You have a risk of, say, keeping a 8-10% stop loss at current levels. If it works out over the next 1 to 2 years, could be a 30 to 50% mover or maybe higher.
Right. Okay, Sanjiv, Bhasin, great to have you on the show as always. We'll see you again for all the market talk tomorrow morning. Let me also welcome on board Deven Choksey then. Deven, hi, morning. Good to have you on the show. Lots of data points, right, to look out for. I mean, not just that there is expiry, you'll have the auto monthly sales, you'll have the state elections. We'll, of course, be keeping a keen eye on what the dollar as well as the Brent movement is. But you'll have quite a few listings as well from the primary market. What to your mind is going to keep the market mind space occupied?
Yeah, Ashok, good morning. Well, I think the market definitely wants newer stocks in the portfolio. Companies like Tata Technologies, which is basically an engineering R&D business, definitely I think is the first in the list. I think which is getting listed in the next week. And I believe that I think these are the companies which are likely to see the inclusion in the portfolios of some of the large investors, including mutual fund, including insurance companies. The whole important point here is that I think market definitely wants, I think, the larger number of sectoral play. Like engineering R&D is one sector where I think you have likes of Tata Elxsi, you have likes of Science Technology, KPIT, LTI, Mindtree. Some of these companies which are having the niche within that, I think that also adds into the Tata Technology kind of companies. So the portfolio basket is expanding, and that is what is keeping us busy. I think adding into the portfolio some of the good quality stocks. I believe that I think selectively, fundamentally, some of the good companies looking good in automobile ancillary. They also are likely to be one more area where probably you are going to see the larger amount of inclusion in the portfolio. OEMs like Ashok, Leyland, which is fairly lagged behind compared to the peers like Tata Motors, are likely to see the rally up on upswing. So I guess I think the selective stocks in the market are likely to show improvement into the stock price, and I think the appreciation in the portfolio of investors.
Nikunj, you were talking about price hikes as well, and now even cars are set to get expensive. Audi has announced a price hike, and Maruti has not specified how much. Audi has said 2%, so you have to get your Audi before the 1st of Jan.
With Avan, it's only 5 stars and Audis. I didn't start it.
No, it's price
You
hikes.
focused on Maruti, which is more
hikes.
important for me.
Yeah, but Maruti, expected to raise their prices. Let's get in your thoughts then, Deven. Within the entire auto space, what exactly is it that you're looking at, given these price hikes that are likely to start off? Because the sector is acknowledging inflation, high raw material prices.
So fortunately, inflation remains to a greater extent under control, and input costs have probably, I think, remained by and large under control. The normal price hike with the new models in the new year, I think, is a normal tendency of most of the auto majors, and that is what they do. So I'm not completely surprised. However, I think for large volume player like Maruti, which commands highest market share, and with the kind of focus on the value-added SUV portfolios, I believe that I think the Maruti definitely remains as a strong bet. Of course, the stock price has little headroom at this point of time. So one will have to buy when the market gives a correction or a deep correction. Maybe at this point of time, I think the opportunity remains stronger with companies like Ashok Leyland, as I just alluded a while back. I believe that I think the commercial vehicle segment in particular, both for Tata Motors, Ashok Leyland, Eicher, I guess I think is likely to show higher amount of traction going forward on few counts. Infrastructure-led spending is asking for higher amount of volume increase for these companies. At the same time, newer roads getting constructed, newer industries coming up through PLI schemes. I think that is where again I think the demand is increasing. Agri sector performing well through the cooperatives. Again, I think the demand is increasing. So and scrappage policy to name the last one. I guess I think are all put together, suggesting that the commercial vehicle demand is likely to rise and rise very smart. Most of the commercial vehicle stocks haven't done enough, as I see it. They are likely to be outperformers in next 2 years or 3 years portfolio. So probably, I think one could ask for buying some of these companies into the portfolio, given the corrective markets in the stock.
The stock which has done exceptionally well, you will rub your eyes when I said that's actually New India Insurance. And my colleague Anurag Shah did break a story in terms of how the compulsions of policy are going to be changing there, and which means that if you don't have all the cars, and especially the government cars which do not have insurance policy, they will not be allowed to apply. That's New India Insurance for you. 7-day change, 40% volumes. Look at the volumes. Volumes on Friday were almost 4 million. Sorry, 40 million, I beg your pardon. 40 million. That's 4 crore shares. Kunal, I don't think we've discussed this stock ever, but more like bolt out of the blue, up 40% on 4 crore shares.
Yeah, it's a very strong breakout. But again, Nikunj, these stocks are nowhere close to their previous lifetime highs. I think, for example, New India Assurance, the all-time high levels is close to 375. The stock is at 200 levels. GIC, I think, again, the stock is almost at a 40% off or a 45% off from its lifetime high levels. And if you just exclude the last week's performance, these stocks were going through a bit of a sluggish trend for themselves. But I think last week's breakout, and especially the last couple of days, was more of a very strong up move for these names. This makes the stock come back to their multi-month highs, and the breakout in terms of volumes, as you rightly said, was also quite noteworthy. This makes the the possible trend for these stocks much more stronger. Now, what matters over here is that the follow-through price action. We may not see it immediately for these stocks, but even if we expand a time span, say from 1 week to say 1 month, and we see the next 4 weeks of price movement, even if we get a 10% to 15% swing on these stocks on the upside, this could probably indicate that the start of a new trend has happened for these stocks, rather than just an event-based rally for these names. So I think now what matters is in the next 3 to 4 weeks, if these stocks see another 10% leg up for themselves, that could be a decisive sign of a change of long-term trend for these names.
All right, just checking in as well on some of the stocks that have held out on the Nifty 500 quite smartly over the last 1 month. And Ratan India, that stock that has soared about 50% plus, so it's had a pretty strong run up. We flagged off New India Assurance. There's also been something like a CDSL, which has seen a smart move, and Swan Energy, along with General Insurance, have rallied about 40% plus. Naresh, let's get in your thoughts. Anything within this space standing out?
So CDSL is something which has done well. It's given a breakout and made a breakout move. Could consolidate here before making the next move. The trend is positive. So that's a stock which is a buy on dips. Out of the other names, I would just go with CDSL. That's a stock, and maybe start looking at broking companies.
Okay, fair enough. That's the view coming in on some of the smart movers. But in the meantime, Kunal, let's also understand where exactly you stand on some of the stocks that had it a bit rough on Friday's trading day. M&M Finance, for example, as well as something like a Manappuram Finance?
Yeah, in fact, I would probably believe Manappuram Finance could be a bit of a disappointment because, I think last week or the week prior to that, the stock had seen a very strong single-day up move backed by some huge jump in volumes on the daily charts. I think the stock had crossed 160 mark, which is also a multi-month high for Manappuram Finance. In fact, it was a 52-week high for the stock at that 160 plus mark. But then post that, the stock has not seen a follow through. Now, the good part about the chart is that the stock is trying to come back to fill that gap which was created on the day when the stock had crossed 160 mark. But the good part is that the stock has not yet filled it completely. So maybe this could be just a mean reversion to try and fill the gap, and post that the stock may start to move up higher. So the risk reward at current levels could be attractive for Manappuram Finance. M&M Finance is more of a stock which has been very sluggish. I think from 270 to 75 levels, the stock has more or less been very flat. Even if you look at the last 1 week of price performance, I think except for Friday's move, the stock has been absolutely flat at those 270 odd levels. So looks like that the stock would probably continue to remain to this range, but Manappuram Finance is something which could be attractive. 140 is a major support, and keeping that as a stop loss would still suggest a buy on the stock.
Right. Deven, it's the new paper. I mean, everything from an IREDA, which is going to list on December 4th, to a Gandhara Oil, Federal Bank Financials, Flair Writing, and then, of course, the much anticipated and awaited Tata Technologies. Where is it that you feel we're going to see a dhamakidhar listing, if not already?
So I think Tata Technologies we already spoke about, and I believe that there is an appetite for investors to add into the portfolio for the reasons which I talked about. The Gandhara Oil also looks, I think, reasonably promising company. The niche area in which they are operating currently, I believe, I think that area could possibly give them higher amount of weightage into the portfolio because they are a specialized derivative company as far as I think the crude oil derivative markets and the products are concerned. So from a perspective of looking at adding the stock into the portfolio, this one should remain equally, I think, interesting. And the third one would be, of course, I think IREDA, where I think the larger focus is going to be on the projects which are on the renewable side. Of course, I think these are all infrastructure related NBFC businesses, so they take relatively longer time to shape up. But in my viewpoint, I think it will also demand some systematic inclusion in the portfolio. Fortunately, I think for mutual fund industry, we are having a larger fund flows coming into, and as a result of which, I think they have the appetite to expand a basket of stocks into the portfolio. That's where I believe that some of the newer papers will stand a good chance to get inside or included into the portfolio. We like some of these companies which we talked about as business models are looking promising. Maybe the market gives opportunity during the listing time. It could be a good opportunity to add them into the portfolio.
Deven, where are you booking profits? We always tend to focus on kya lena, what to buy, what more to buy, what to add more. But to buy something, you have to sell something, right? That's how it works. Unless you're sitting on cash. Where are you exiting completely? Where are you locking some gains? Where are you, redeploying capital?
So it's a very interesting point, Nikunj, and I'm glad that I think we are discussing this subject. Well, I think there is no perfect theory as to how to exit the stock, but we believe that I think when the fundamentals of the business remain strong, you don't completely part with your investment. So the strategy that we follow out here is I think we keep 70% of our portfolio intact. I think when we are invested in a good business where we see the long-term prospects bright into those businesses. and maybe I think 30% of the portfolio we keep it aside for the spike. I think in the portfolios where we see the profit booking opportunities. So there are a list of stocks I think where we see the headroom is comparatively limited, and maybe I think those companies where 10 to 15% kind of headroom is available currently. Some of the large cap companies, overowned companies by mutual fund. I think we try and retain. We try and I think keep the maximum investment. I think at the 70% level, and then balance part we try and book profit, shade some amount of weight out of that, and at the same time invest that money into some of the promising newer companies which are coming up into the portfolio. Our understanding is that I think 2024 till first half of 2024, market is likely to remain extremely strong. And if that is the case, then possibly there is no point in exiting the portfolio investment completely, particularly when you're convinced about the business. And that is where I think you book some part of the profit in the rising upside, on the upside in the market, and you create a further portfolio into you. As far as I think the profit booking is concerned, and swapping into the better quality stocks which are recently getting into the market as listed markets.
क्या हो गया देवन भाई गले में खराश
This weather is affecting all of us.
Weather yesterday Bombay AQI was 88, cleanest I've seen in a long time. Where were you?
Thanks to the rains, but it unseasonal, right? So everyone's bound to fall sick.
Yeah, I mean, just happened. I never expect. I mean, but yesterday the sky was absolutely clear, and I said, okay, क्या हो गया? And I looked at the weather app. It actually said AQI was 88, which was as high as 300 just in and around Diwali. But Delhi, the miserable state continues. I mean, 350.
No, even Delhi last night it rained, which is why all those flight cancellations and all. So
I saw it 2 days ago. It was some 300, 350. But Delhi happens every year, Aisha. Yeah. I mean, we may talk about the perils of infrastructure development. That's what's happening in Bombay, and look at what's happening to the city. Okay, I'm going to switch gears and let's talk about markets are about to open. The pre-open rates will just come in a second from now. The implied GIFT Nifty rate is indicating that we could be in for a smooth start. So we've discussed New India Insurance. I think I'd like to discuss LIC now. And Kunal, this is like the real tail ender now who started batting.
Yeah, even this stock had seen a breakout on Friday. Again, exceptional volumes for the stock, something which we've not been even accustomed to for LIC India. I think the last stock had seen such kind of volumes was on the day of listing for the stock price, or maybe in the next couple of days post that. But I think, again, as I said, that the stocks have a long distance to gain substantially to try and even cover up or come back to their major breakouts for themselves. First sign of volume accumulation indicates that there is a sudden change of price action. But then we need to see that whether the sudden change of price action for these stocks is followed up in the next subsequent 2-3 weeks or so for these names. And I think that's what we need to watch out for, even for stocks like LIC. Now, just to give a different context in terms of a different stock, what happened to Manappuram Finance 1 week back, the stock jumped up on exceptionally strong volumes, came back towards a multi-month high above 162 plus mark. But then what followed over the next 1 to 2 weeks was the stock coming back towards a retracement or a support or a corrective wave. Now, if that's the case for many of these insurance stocks, then we could probably term this more of an event-based rally and a one-off rally for these names.
Deven, is there merit in, let's say, looking at LIC deep value? The stock is consolidated a lot, way below its offer price, and whatever happens now in terms of rate of change for LIC will be positive.
Well, I think there is no reason to go negative as far as I think the business remains. I think the business prospect remains. They are absolutely convincing. The portfolio shift from par to non-par policy, I think that is a very welcome move, which is basically helping the company in adding into the bottom line profits. I think that is also phenomenally, I think, a change move that one can experience. At the same time, a constant, I think, increase into the portfolio of investment that this company has built is suggesting that over a longer period of time, I think you are likely to see the regular income flowing into the balance sheets of the company and for the shareholders. So these are all some of the fundamental strengths of the company which remains very positive, absolutely. And we also believe that they are adapting to the digital platform also equally fast and creating a larger amount of presence in the distribution. The main important point and the challenge out here as far as the stock market journey is concerned is an overhang of the dilution of the equity, because that is something which is already done. And as far as I think the stock price upside is concerned, every time I think the stock has to go up, I think one will look around that if the company will go and dilute the equity new investors. So that is where probably I think this overhang continues. But otherwise, I think the business remains absolutely convincing. Maybe some better communication coming out from LIC on a regular basis to investor could possibly inspire more confidence into the marketplace about this company.
Deven, great to have you on the show. We'll let you go on that note. And let's take some mid-cap trading ideas as well on that note, considering that's the one pocket where all the action is. Naresh, what's on your list?
So, the name I would be looking out for is a small cap, which is finally broken out as Sun Pharma Advanced Research Company, Spark. The stock has given a breakout, very strong volumes on Friday. We saw a volume which was almost closer to 5x the general volumes for the last few sessions. A classical cup and handle formation here. 265 was a resistance for the last 1 year, which got tested in the last month as well as the month of August and October of last year. So a classical breakout, and we've seen breakout happen in Sun Pharma as well. So this stock generally tends to take a step after Sun Pharma breakout. So breakout is clean out here. I would expect a move towards 320, stop loss at 260.
Right. Kunal, what about your mid-cap strategies?
That'll be a buy on NMDC. The stock has done pretty well for itself over the last 1 month. Now, even though the momentum is a bit more staggered for NMDC, but I'm backing the move for the stock over the last 1 month, expecting a strong up move hopefully in the next couple of weeks for the stock price. 188 as a positional target, stop loss at 166.
All right, let's move right on. Lots of top stories as well to track. And fast fashion Chinese retail giant Shein has filed for its IPO in the US after long-standing rumors of the retail giant going public. Now, according to reports, the retailer could start trading as soon as 2024. Meantime, Chinese tech and giant TikTok, the owner of ByteDance, is reportedly axing off hundreds of jobs in the gaming division, marking a significant retreat from a segment that it had invested billions of dollars in to challenge the market leader Tencent. And in some relief for people in Israel and Gaza, the humanitarian truce deal that brought a pause to fighting has been extended by 2 days. This extension means that at least 20 more Israeli captives and 60 Palestinian detainees that were held in Israeli prisons will now be freed.
And in a race against time, rescue teams back home have gained momentum in their efforts to save 41 workers who've been trapped for over 2 weeks in a tunnel in Uttarkashi. 12 rat hole mining experts are involved in manual drilling and excavation horizontally through the last 5 to 6 meter stretch of the debris, which remains now, while vertical drilling is also in progress. And there seems to be no respite from polluted air in the NCR region in Delhi. The rain brought down the temperature levels by a few notches, but the Delhi AQI continues to remain in the poor category. IMD has predicted the forecast of a further drop in temperatures by 2 to 3 degrees in northern India, with rainfall likely over the next 2 days. An orange alert has been issued for Uttarakhand as well as Himachal Pradesh. And also, ace fashion designer Rohit Bal is in critical condition and on ventilator support in a Gurugram hospital. According to reports, the 62-year-old fashion designer was rushed to hospital 3 days ago due to pre-existing cardiac condition.
Lots of stocks to track, but we're adding one more to that list and finding out what the cover is on SJS Enterprises. That's in the spotlight. We understand that the company is in advanced talks with its customers for some cover glass orders, which it could be bagging very soon. Let's get in Sharad to find out what the cover is. Sharad?
SGS Enterprises is in focus, and the company is set to be in advanced stage of discussion with its customers for its cover glass orders. Now importantly, the content per vehicle for this segment, which is the cover glass business, that is expected to go up by almost rupees 4,000 per car, and importantly the analysts have also stated that the company might be enjoying an early mover advantage for it. Also importantly, the company is hopeful of bagging the first set of orders. This is coming in the fourth quarter of FY24 or by the first quarter of FY25. Importantly, channel checks also suggest that OEMs are actually looking to localize this component going ahead, and of course the auto ancillary theme would be at play. Now importantly, if you look at the stock also this year, it has given almost 25% return in 2023, but the last month itself there has been a slight correction of almost 8 to 10%.
Thanks very much for giving us that cover. Moving right on then, let's find out what the top index calls are from our chartists. Here's what they're advising in terms of positions on the frontline index, and it's a clear hold call coming in from both of our chartists. Touch and go with the 19,800 mark, and for now the pre-open rates as well holding out above that level. And when it comes to the Nifty Bank Index, actually it's a buy call from Kunal, and Naresh believes that it's a hold recommendation. Well, watch out for Paytm in trade today as Berkshire Hathaway has exited the company via a block deal. What does it mean for the company? Let's understand what the stock implication as well could be. Let's hear how the editor's take.
Paytm never enjoyed this Berkshire premium. It was never a Berkshire company.
Yeah.
You know, there are companies that Berkshire Hathaway is invested in. It always used to command that, okay, you know, this is a stock or a company which is noticed by Berkshire Hathaway, and that in a sense is going to be the next wealth creator. With Paytm, even though Berkshire Hathaway invested in them when they were, I think, not listed. Yeah, they were not listed for sure. I think 2018 they invested in it. It never really enjoyed that premium. It went public. Okay, Berkshire Hathaway was an investor in it. The stock had a very poor listing debut, and then it came down almost to 500 rupees, despite the fact that Berkshire Hathaway remained invested in it. Now this is not an investment, or this was not an investment by Buffett himself. It was by his team. So you got to take that with a pinch of salt. I think this, in a sense, could be one of those factors where Berkshire Hathaway may have said that, okay, our template why we invested into Paytm has not translated into reality. So it's a pure investment decision. Since the stock never enjoyed the premium because of Berkshire Hathaway, so even if Berkshire Hathaway is exited, I don't think there would be any impact per se. You know, for example, if there is a company where the great Rakesh Junwal had invested or other Kishan Damani had invested, it always starts enjoying that premium. And when they exit, market would say, okay, the pipe piper is out, what happens? So Berkshire Hathaway was never the pipe piper. So it's going to be just 2% investor which sold in a block deal, nothing more, nothing less. Naresh, how's the chart of Paytm looking?
The stock has been sideways for the near term, but the longer term trend changed a few months back. After that breakout about 750 odd levels, it retested it also. Technically looks pretty promising here, and the whole stock has relatively weaker, say, move compared to the rest of the names over the last 3-4 months, thanks to the lot of block deals which keep happening on the stock. But it has not broken down any meaningful levels. So for the last 4-5 months, the bottom is around 850. And for the last 2 months, the bottom is around 870. So I would be looking at it as a breakout candidate once it starts sustaining about 920, 925 levels, which has been the high for the last 1 month. So pretty promising. A lot of blocks done. We could be seeing the next leg of the move, and will be going towards that 1,000-1,200 mark in the short term. It is very similar to what happened to the stock back in end of March, wherein there was a lot of bull deals, and then the stock consolidated from March to June and then made a move of 20%. So pretty promising here. One can actually take a preemptive buy at current levels as well.
Okay. 891, Berkshire Hathaway is out. The block deal is over. Like I said, I mean, it was never the pipe piper. So their entry did not create excitement. Their exit is not going to create a lot of excitement. Berkshire Hathaway was invested in Paytm before they went public. When they went public, after the selling happened in terms of the anchor investing, they never sold a stock. But they've sold at a very unusual time when the business, in a sense, has gone through a very testing times, and now things are stabilizing. So it's a call. I think, you know, every fund has a view, and it's their view which they're entitled to. But what is worth revisiting, Kunal, are the Sun Pharma twins, Spark and Sun Pharma, both at a new high.
Yeah, I think so. Over here, Nikunj, Sun Pharma is something which looks the more attractive ones, because you know, remember this trend which started off for the pharma stocks start of this year, where there were three names which started to look attractive. So I think it was Aurobindo Pharma, Glenmark and Zydus Life. These three started off a very strong uptrend for themselves, followed up by recovery or a strong recovery in the likes of large cap names. So the first 3 or 6, 4-5 months of this calendar year, you had actually seen these three names, pharma stocks, doing pretty well. But in the last 4-5 months of this year is where you've seen the large cap stocks making a strong comeback. Sun Pharma particularly, I think that stock making a comeback. The stock was almost at 1020 or 1040 levels just about few months back, and from there the stock is now back to that 1200 mark for itself. So I think that's a more stronger chart, and it also syncs with the overall trend for these large cap pharma stocks making a comeback in the second half of 2023. So I think that's where I would probably believe that Sun Pharma could be an attractive trade from here on.
1197 for Sun Pharma. Spark has also made a comeback. But Naresh, we need to revisit perhaps the insurance stocks again. It started with an unusual name, New India Insurance. Now just about every insurance stock is now showing signs of inertia. So do you think next 8-10 days they belong to insurance stocks?
So yes, the PSU ones have done really well. The larger ones have not done as well. We just saw one day move which did not follow up in a SBI Life. But the technical structure is pretty positive. So I would be watching out for HDFC Life and SBI Life. The reason HDFC Life, because it's gone sideways and is testing the last 4-5 month high around that 680 mark. SBI Life has been a clear-cut outperformer, has not corrected much over the last many months. The stock has had multiple attempts around 1350 levels and gave a breakout and is sustaining around that 1400 mark. So it could be the time wherein the private insurers do well compared to the PSU ones, which have moved 30-40% in the last few sessions.
All right, so watch out for those levels. But in the meantime, we'll be bracing ourselves for a fairly okay-ish start. Do remember, when it comes to the rest of the globe, you did have the US markets, which got off to a pretty tempered start. We'll keep tracking what happens as well when it comes to the broader indices, because that's really where all the action has been, given that the mid and the small cap indices have been at record highs. You've got sectors like auto, real estate, and even pharma hitting record highs. So whether or not that traction is set to continue is going to be closely watched out for. And when it comes to the Nifty Bank, Kunal as well had a buy recommendation on the Nifty Bank index. So we'll have to wait and see what direction it goes. But Nikunj, just about 10 seconds to go for the markets to open.
And then implied Nifty is indicating that we could be in for a smooth start. I just get a sense that the state outcome election would be just the lead indicator of which way the directional market would move, but that's coming next week. This week we have to deal with FNO expiry, and then there's an OPEC meeting. It's a perfect market breadth once again, near perfect market breadth, and that's what you need to focus on. The Nifty and the Sensex, they tend to occupy a lot of mind space, but frankly everybody just looks at them and ignores them because they are not the trend setter in terms of deciding the market mood. The small cap index, the breadth of the market, what's happening to some of the two-digit stocks, how real estate stocks are moving, what's happening to the comeback in pharma stocks, the excitement in the IPO market. Those are the talking points right now, really, from a market standpoint. So it doesn't matter where Nifty is moving. It's not expected to move in a big way. That's Nifty for you. But let's start looking at some of the trending names. So you want to start with insurance stocks, the PSU ones, New India, LIC, GIC. What's happening there? New India 3% higher, another 4% higher. LIC trending move, 6.5% higher now for LIC. 6 rupees higher for LIC now. 6% is what it added last week. And then you've got strong price action, which is there in Welspun Enterprises, MapMyIndia, Spencer Retail. Just random names which are popping up in terms of the theme. DB Realty, well, the promoter have said that we've offloaded 3% stake largely to raise capital and to retire debt. Unusual, but that is having an impact on the stock process. So it's a good start, Aisha, once again from the market breadth.
Yeah, it's a decent start. Let's check in on what Honasa is up to. Much speculation over the weekend, wherein there were reports that, there's going to be a block deal which is going to be executed at a 5 to 7% discount to market price. And then, of course, the promoters denying that, saying that the ESOP sale is not going to take place. The stock is down sharply, 4% lower, 456 is where Honasa Consumer is currently in trade. There's also DLF which is in focus. Remember, the ED has conducted search operations at DLF's headquarters in the Supertech land purchase matter over the weekend, mildly soft for DLF as we speak. The entire gamut of the holdco companies are going to be in focus. The delisting regulations, remember, have not been approved by the SEBI board, so that entire gamut is going to be in focus as well. There's also Cello World. The profit revenues are up 4% each. There's been a margin decline, however, on a sequential basis. And then, of course, reports indicating that Maruti is going to be hiking prices across models in the month of January. So let's check in on what Maruti is up to, just mildly higher as we speak right now. There's Fortis, which is looking to divest its entire 62.7% stake in Fortis Malar for a consideration of 128 crore rupees. So that's another stock which is going to be in focus. And of course, Paytm, like Nikunj flagged off, wherein Berkshire Hathaway has sold its entire stake via block. That stock lower by about 1% as we speak. Let's check in on what BSE as well is up to. Jefferies has initiated coverage with a 20% upside is what they're indicating. 4.5% of a gap up on BSE as we speak right now. And then there's TCS, wherein the company has been asked to pay $210 million fine to DXC Technology in the trade secrets row. So that's another stock which is going to be in focus as well. For the index per se, it's a very mild start, absolutely flat, but with a positive bias. Of course, it's the broader markets once again which are doing much better. Kunal, any trend or trade that you're spotting?
So I think other than HAL, which we discussed in the morning, HDFC Bank from the larger cap banking names is also looking attractive. The stock, I believe, has made a decent comeback. So that 1450 low for HDFC Bank approximately is a major support. And I think keeping that as a position stop loss would like to carry on the long futures trade for HDFC Bank.
All right, Naresh, let's get in your take as to how the markets have started moving and any stock that catches your eye as your first trade.
So that would be Sun Pharma Advanced Research Company, Spark, which has seen good volumes. Looking at it as a buy at current levels as well as on dips.